All right, students, it's Friday morning. Um, gonna I'm gonna pick up two additional problems, just so you get a little bit more examples on how to calculate depreciation. And so the couple additional problems I want to pick up are 46 and 47. And so 46, again, it asks us to maximize the depreciation deduction without claiming bonus depreciation. So again, like we talked about before, we're going to take the section 179 on the boat. The boat has a value of this. We're going to take section 179 on this. And then we're going to take, that leaves us with $3,000. This is a 10-year asset, so we're going to take 10% of that, so that is $300. So we're going to take those two plus the 300. We've now used up all of our section 179. So then we're going to take the computer, which is $60,000, times 20%, that's the table amount, gives me $12,000. Then we're going to take the furniture, 480,000 times 0.1429, again the table amount, which if I did the math right is 68,592. So my total depreciation amounts are my section 179 of 1,020,000 plus 300 plus 12,000 plus 68,592. Problem 47 again is easy because this is all 5-year property. And in part A, we don't claim bonus depreciation or section 179. We're just going to take and add the total of all those up. Take that times 20% and we get 274,200 is our depreciation amount. What could Harold do to maximize his 2019 deduction? Bonus depreciation, because bonus depreciation is 100%. I actually don't need to elect section 179, but I could also elect a combination of section 179 and bonus depreciation and take my depreciation deduction for 100% of my purchases in the current year. One more thing that I need to mention, which I haven't talked about so far, is remember I told you that we use the mid-year, mid-quarter, or mid-month convention. So if we're using those conventions, the tables in the year of purchase already take into those into account. But in the year of sale, obviously the tables can't anticipate that. And so we have to do that calculation manually. And the way we're going to do it manually is under those three assumptions. If it's a mid-year convention, we're just going to take the table amount for whatever year it is times 0.5. If it's a mid-quarter convention, we're going to take, if we start with table 4, we're going to stay with table 4, even if we sell the asset in quarter 1. So if we start with the fourth quarter, we stay with the fourth quarter and make that adjustment manually. We don't go and look at any other quarters. So we're going to take the table amount times the quarter of sale divided by 4, quarter of sale minus 0.5. So if I sell it in the third quarter, we're going to take 3 for the third quarter minus 0.5 to get 2.5 divided by 4. So it's a quarter of sale minus 0.5 divided by 4, and take that number times your table amount. Be the same thing with mid-month convention. Table amount times the month of sale minus 0.5 divided by 12. All right. Let's go ahead now and take care of these last 3 problems. So problem 59. There are 2 ways that I can take depletion. One is cost depletion, which, if you'll remember from your textbooks, cost depletion is calculated exactly the same way as units of production depreciation method. So we take how many units we produce this year divided by the total units that we're going to produce times the amount. And so that's all we're going to do here on 59. They produced 1,000 or sold 1,000 barrels of oil. They're going to be able to produce 15,000 barrels of oil times my cost of $100,000, which is equal to 66.67 then as my depletion amount. Now I can take the greater of my cost depletion or percentage depletion. Now here I made $20,000. It's based on how much money I made. $20,000 times 0.15 is equal to $3,000. This would be my percentage depletion amount, and this would be my cost depletion amount. Now when it comes to cost depletion, there is no limit on how much depletion I can take. When it comes to percentage depletion, I'm limited to 50% of my income before the depletion amount. In other words, I am going to take my income minus all my expenses, except for depletion. Once I get that number, then my depletion amount then is limited to, my percentage depletion amount is then limited to 50% of whatever that number is. Okay. Here, my cost depletion is the higher number, so that's the number then that I'm going to take here in this problem. Now in the next part of the problem, we now have a change in estimate. Now here we sell in the next year now, we sell 3,000 barrels. We have a change in estimate to 18,000 barrels. And now we're going to take that times 93,333 because that's my remaining basis. And if I've done the math right, on this. I think my depletion amount is 15,556. It's my depletion amount, my cost depletion amount now for the second year. Again, my percentage depletion amount here would be 5,000 times 50,000 times 15%, which would be $7,500. Again, I'm going to take the higher of the two. I'm going to take this 15,000 right here. So then they say, I'm going to sell this now for $190,000. 190 minus my basis, which is my 100,000, minus my 6666 or 67, minus my 15,556, which, if I've done my math right, produces a gain of about $112,000. And that's problem 59. All right. We've talked about Section 179. Remember, Section 179 assets. Section 179 assets are depreciable personal property used in a trade or business. We also have Section 197 assets. And Section 197 assets are intangible assets purchased as part of a bulk purchase, or goodwill. Goodwill is also a Section 197 asset. Section 197 assets are amortized over 180 months, and it doesn't matter what it is. For example, a covenant not to compete that only lasts 2 years only has a useful life of 2 years, but it's still a Section 197 asset, and therefore has to be amortized over 15 years, 180 months. Okay, so that's what we have going on here. Now here what we have is we have a patent that we purchased now for $68,000. We're going to take that $68,000, divide it by 12 years, because this is not part of a bulk purchase. So the useful life is 12 years. We amortize it over 12 years. We bought it in June. So we're going to divide by 12 years times 7/12, because June, July through December is 7 months. And that's going to be our amortization amount now on this patent that we purchased. So now what are we going to do with everything else? Well, the inventory obviously is not subject to any type of amortization. It's going to become part of our cost of goods sold when we eventually sell the inventory. Our manufacturing equipment, we're going to take Section 179 of $1,020,000. That, I believe, leaves $156,000 that we're going to take and depreciate probably over 5 years. The patent on the compression process, again, is an intangible asset because it's part of a bulk purchase. That's how this patent is different than the one we talked about earlier. So again, this is going to be amortized over 15 years. It doesn't matter what its useful life is. going to be amortized over 15 years. And because this stuff was acquired in September, we're going to take it times 4/12. The same thing with the goodwill. Going to take it divided by 15 years times 7/12. And that's then going to be my amortization then. And my depreciation now on problem 60. On problem 61, inventory, again, is going to be part of my cost of goods sold. My equipment, I'm going to take in and either Section 179 or bonus depreciation for the entire $30,000. The building, I'm going to take and depreciate that. I think the table amount is $0.01819 for about $2,183 depreciation on the building. The patent is going to, again, as part of a bulk purchase, so 15-year amortization times 8 times 7/12. Because it's after the 15th of April, we don't count April. We're only going to count May, which is January, February, March, April, May, June, July, August, September, October, November, December. 8 months, we're going to times it by 8 months. And so we're going to times it by 8/12. And that's problem 61. I'm going to get an exam out to you on Monday. We won't have class. We won't have class on Monday, but I'm going to send you an exam on Monday. It will be due Monday night, and we'll start on chapter 11. Then on Tuesday, we'll go over the exams next week when I can get a chance to get them graded. And with that, have a good weekend. Be safe. Bye.